Hello, Mark Sturdy here with another fresh summary of our work this week on 7 days ahead, looking at major world markets. And if we look at the summary, you'll see that we remain bears of the dollar, bulls of the euro. We remain bulls of the S&P 500 in all time frames. And we've added to that being bullish of the Nikkei 225 in all time frames. We remain bears of the US Treasury note yields. We've pulled back from our bullishness on yields in the gilt. Short term, it's a bit uncertain, we think. And gold we remain bulls of in all time frames. Let's just go through those quickly, starting with the dollar euro. The position there is that long term we have this tremendous break up through resistances, three resistances, that sets the market up for further bull euro moves, bear dollar moves. We have been going sideways for a number of weeks, indeed a number of months, but good support has been found and repeatedly tested beneath the market, so we feel very, very well supported and in a position to move ahead. And the catalyst for moving ahead looks to be a head and shoulders continuation pattern, which closed right on the neckline at the end of last week, and we think it'll move ahead this week. It's all in good fettle. The S&P 500, we're bulls of. Oh, I beg your pardon. The long bull market, the pullback to, we've pushed ahead, the pullback to very good support, I beg your pardon. Here at 47.96 was rapidly reversed. There's the pullback and there's the reversal. We've now pushed above the prior highs. The market's been edging better. There has been a pause in recent days. Cautious bulls will wait for a break of 65.23. We think it's already bullish. And the market wants to go ahead. We are similarly very excited by the Nikkei 225. Long-standing bottom formation here, complex but clearly identifiable. Head and shoulders reversal calls the market up very much higher. Added to which has been the break. Once that was completed, we've had this repeated establishment of a bull trend with repeated tests of prior highs, both here and here twice. And then, notwithstanding that, the market's broken above this very long-term prior high around 1980, 39,600, and broken above there. So the long shape of the market is very good. The medium-term shape, this is the weekly continuation chart, is a push above 42,270, which, having broken above and tested down, found to be good support and is now pushing ahead. And the weekly September contract, rather than a continuation pattern, shows the same thing, but in the form of a continuation triangle that is broken up and calls the market up to about 50,000, I beg your pardon, 49,000. A long way to go yet. Short term, we've seen a test of the recent highs, 41,830, and as I say, rather like the S&P, cautious bulls will wait for a break of 43,710. Less cautious bulls will already be long and looking to add on at that level. Last week we were bearish of US yields, notwithstanding the fact that it's still within this long-term trading range. We saw this head and shoulders reversal. Sure enough, it broke at the end of last week and has further to go, but to the bottom of the trading range, probably, we think. There's the days leading up to the closes of last week, and now we think this will push on. The gilt, we were very bullish for yields and gilts, and we remain so in the long and medium term, but there has been a pause. When the American market went ahead for lower yields, there was a sharp reversal, leading to a weekly key reversal in the yield chart, for example, here. And we don't think there should be overstated the importance of this, insofar as there are quite often weekly key reversals in this chart. So not to get carried away, it strikes me, there was a small triangle. The large triangle is the big bear factor in the gilt market, suggesting very much higher yields, lower prices. In the yield chart, the equivalent was this triangle here, which is yet to break. But note that we saw a triangle within this large triangle, which we thought was the short-term catalyst for a breaking of the long-term yield triangle. It hasn't happened yet. We think it will happen, but short-term there is an uncertainty about the market due to the rapidity of this rally. As a matter of fact, we think, looking at the yield chart in terms of closes, that we may yet find support exactly where we are right now. This triangle may already have broken. So it's a complex situation. It's not unambiguously bullish for yield, bearish for prices, but we still think the broad case holds. But naturally enough, traders will want to see some more evidence before getting long of yields, short of prices. Oil within a trading range. Gold, still very exciting. The big picture is of an exhausted series of bull patterns. The market's gone way beyond these two targets from these patterns that started in the 2010s. However, last week saw the completion of another continuation triangle, which we think the market will use to lever itself higher as far as 39.50. So we remain bulls. Medium long-term trend is intact, and the short-term situation is that the market broke up above prior high 35.85 and has further to go. Good support beneath the market. Buy gold. Thanks very much.